The New Zealand dollar against the Switzerland franc is currently trading between two institutional zones, but I am not interested in chasing price. Inside the CJFXTrade method, we let the market come to us. Let me show you exactly what I am watching this week. Welcome back to the CJFXTrade, where we trade with structure, patience, and institutional logic. Every analysis follows the CJFXTrade method. First, we understand the market context. Then, we filter the quality of the zone. Next, we wait for confirmation. Then finally, we manage risk. Let's begin this analysis. The first stage of the CJFXTrade method is context. Before thinking about entries, I want to understand what the higher time frame is telling me. On the daily time frame, I have a strong demand zone between 0.45393 and 0.45165. This demand zone immediately caught my attention because it broke above a descending trend line, showing sellers were losing control. It also broke above the previous lower high, giving us a shift in market structure. Finally, these zones sit around an area where price has reacted multiple times in the past, creating support liquidity. These are the types of areas where institutions have previously shown buying interest. If price returns to this demand zone, I will be looking for buying opportunity, but not immediately. Price has also created a fresh daily supply zone between 0.46182 and 0.46378. This supply formed after price broke below an ascending trend line and closed below the previous higher low. That tells me sellers have recently taken control. As long as price remains below this supply, I will be watching for selling opportunity back towards the liquidity resting above the daily demand zone. At the same time, my job is not to predict, my job is to prepare. Once I understand the context, I evaluate the quality of the zone using the CJFXTrade 3P institutional filter. The first P is position. The daily supply zone sits as a premium area after price rallied. The daily demand zone sits at a discount area where buyers have previously stepped in. Both zones are positioned where I expect institutions to become interested again. The second P in my institutional filter is power. The move away from both zones was explosive. Strong departure often suggests aggressive institutional participation rather than weak retail buying or selling. The third P on my institutional filter is purpose. Both zones achieved something important. The demand broke a descending trend line and market structure. The supply broke an ascending trend line and the previous higher low. That gives both zones institutional credibility. Moving down to the 4-hour time frame, the market is producing lower highs and lower lows, confirming short-term bearish structure. We also have a 4-hour supply zone between 0.46182 and 0.46299. I like the momentum away from this zone because it removed a previous demand zone and break market structure. However, I wouldn't blindly sell from it. There has been considerable trading activity above the zone, making it significantly less clean than I usually prefer. The good news is that this supply zone is sitting inside the higher time frame daily supply zone and also a downward trend line supporting the trend, giving us additional confidence. That makes it an area worth monitoring. Now we move to the third stage of the CJFXTrade method, the 3L entry model. Inside this method, I never enter simply because price reaches a zone. I wait for confirmation. If price returns to either the daily or 4-hour supply or demand zone, I will drop down to the 1 hour or 15 minutes time frame. I am looking for signs that institutions are stepping back into the market. That could be a break of market structure, a trend line break, the removal of an opposing zone, or the formation of a fresh supply or demand zone. Without confirmation, there is no trade. At the moment, the 1 hour time frame is moving sideways. Neither the previous swing high or the previous swing low has been broken. That tells me buyers and sellers are currently in balance. This is not the time to force a position. Patience is part of the strategy. I will continue waiting for price to return to my higher time frame zone before looking for confirmation. The final stage of the CJFXTrade method is the arrow form risk framework. Even if a setup looks perfect, I never risk capital without confirming and a favorable risk to reward ratio. Protecting capital is always the first priority. There will always be another opportunity. Here is what I am watching this week. Daily supply is at 0.46182 and 0.46378. Daily demand is at 0.45393 and 0.45165. 4-hour structure bearish, 1 hour structure sideways. Current status of this analysis is that I am waiting for lower time frame confirmation. That is my current outlook on NZDCHF using the CJFXTrade method. If price reaches either of these institutional zones, I will share another update with the lower time frame confirmation and my execution plan. If you are serious about learning institutional supply and demand, make sure you follow CJFXTrade for weekly market analysis and educational content built around a structured trading framework. Remember, the CJFXTrade method. C4 gives you the context. 3P filter the quality of the zone. 3L wait for confirmation before execution. Arrow 4 protects your capital through disciplined risk management. Trade with structure. Trade with patience. Trade with institutional logic. I will see you in the next market breakdown.